The Dow's rally was supported by gains in traditional sectors like industrials, financials, and consumer stocks. However, markets are showing divergent signals. Some of the largest tech names faced pressure after aggressive spending announcements. Amazon AS stock tumbled nearly 9% following news of a massive $200 billion AI infrastructure investment plan, which shook investor confidence in the profit outlook for tech capital spending. In the broader market, cryptocurrencies saw mixed action. Bitcoin stabilized above recent lows, and tech earnings catalysts loom on the horizon, with traders watching key data scheduled next week, including U.S. jobs and inflation metrics that could influence Fed policy and equity momentum. In monetary policy news, the European Central Bank held interest rates unchanged, maintaining its key rate as inflation trends closer to target, and economic growth shows resilience in the Eurozone. This move underscores the ECB's cautious balancing act between growth and price stability amid a still fragile global environment across Asia. Central bank activity is also in focus. The Reserve Bank of India reaffirmed its growth outlook, holding policy rates steady while upgrading GDP projections for FY 2025-26 to 7.4%, driven by strong private consumption and investment activity. These developments reflect ongoing monetary policy fine-tuning globally as central banks seek to sustain growth while managing inflation risks and external headwinds. On the trade front, Brazil signaled a potential shift toward broader trade talks with China, suggesting that Mercosur nations could begin negotiations for partial tariff or trade agreements. This change points to evolving global trade dynamics as countries navigate U.S. tariffs and seek deeper market access. In addition, Argentina's recent trade pact with the U.S. in critical minerals markets emphasized that Chinese investment remains welcome, highlighting how nations are balancing trade relationships amid geopolitical tensions. Meanwhile, long-term global growth forecasts have varied. Major research firms see the global economy growing at a steady but moderate pace in 2026, projecting growth near 2.8%, with the U.S. and China contributing significantly, even as Eurozone expansion remains modest. Commodity markets are under pressure as global oversupply and structural demand shifts persist. A recent analysis pointed to commodity prices declining, driven by oversupply in oil and reduced traditional energy demand, especially as economies pivot toward cleaner technologies. Currency markets also reflect macro uncertainty. The U.S. dollar is posting strong weekly performance, nearing multi-week highs as risk sentiment fluctuates across asset classes. These macro trends suggest that while growth continues, underlying fragilities, from shifting energy demand to currency volatility and trade policy uncertainty, remain key watch points for investors and policymakers alike. In summary, U.S. markets hit historic highs with the Dow above 50,000. Tech sector turbulence continues amid huge AI spending plans. Central banks hold steady, balancing growth and inflation. Global trade shifts as Brazil reconsiders China deals. Commodities and currencies show mixed signals. Stay tuned for tomorrow's update. Real facts, real economics.